Hi, it's Peter Temple for Sunday, February the 13th. Big report today because this is a really important weekend and a turning point coming up this week, which is going to shift the market and give us some great prognosis, some great forecasts for the future. Once, I've said this before, once we have a first wave down, it sets up everything because you can measure the rest of the waves. So after having done an analysis of this very difficult market yesterday, I've come to the conclusion that we've just about finished the first wave and we're going to go into a second, and from here on in it becomes a case of looking at our Fibonacci retracements and Fibonacci lengths. So let's review the S&P 500 first of all, and then I want to review at least the NASDAQ and then just take a look at the euro in this video, and I'll post some visuals as well, just giving you the road ahead. So here we are looking back at December the 2nd, 3rd here at our truncation, which I think is an absolute. I've actually taken the question mark off here. Absolutely did happen. So we had this wave up, which was in a 5, but it didn't make the previous top. And then we came down in this really crushed wave, and this is actually overlapping waves, which makes it a corrective wave, but it's only because we had a truncation that I'm considering this as a motive wave. And then we had this ABC, and I called this second wave just as we got up here. I said, no, this has got to be a second wave. But unfortunately with the first wave, you never know how far down it's going to come. And that's always one of the questions, although it did come down to the previous fourth wave. If you go look and widen out the chart, this one was always questionable, and again it had a very crushed look to it. So there's some things here that really don't fit typical Elliott wave, but you know, it works for what we're doing, and when you take a look at the entire thing, you go, oh yeah, this is the first wave. It also had, and I'm just going to warn you here, this is one of the things I'm seeing, and I guess it's because we've got this market all moving together. We've got currencies and equities and the entire thing moving as one. You know, ending diagonals are fairly rare patterns, but I am seeing them absolutely everywhere right now. It's really quite extraordinary. So we had in this third wave down, which comes down to a 3 here, we had an ending diagonal, and these are overlapping waves in 3, and there's a very specific look to them, and so you got to be aware of that. And so going forward, I'm going to look for these more than not because they seem to be all over the place, and it's just one of those things. So what we've had here, that after this third wave we had an ABC up to the previous fourth. It was a little short, but that's good enough, and then through us again, or through me, because we had this ending diagonal, and so we had this overlapping fourth wave into the first, and I said, well, it's going up again, not realizing that again we've got this very rare ending diagonal. I mean, this is twice in one wave. And so here we are today, and this is actually the second wave of the last fifth wave of the ending diagonal coming down. So we're going to see this turn over possibly on Sunday, Monday being a holiday in the U.S. equities. I'm not sure how far it will get down, but I would assume it's going to turn over. I have measured the bottom here at 1745 in the S&P. Now that's taking the first wave, which again is truncated, and we don't have a lot of rules, but if you take that and you look at the top of the fourth wave here and you extend it 1.6 times wave 1, that takes you down to 1745. So that is a little bit of a guesstimate because I'm not sure what we should be measuring here, whether it's the top of the wave or it's from the top of what should have been the top of the wave, if you get my drift. And so this is what I would assume. It may vary a little bit. It also may get a little longer because this is an ending diagonal and they come down like a sharp knife, and we'll see whether it goes a little further. I have a turn date of Tuesday on this, cycle turn date, and I would expect this to hang around here for a few days at the bottom. And I'll get into the euro and show you why that's true, and I will also point that out in my written work, that I would expect us to hang around here for a few days towards the bottom. Then we're going to go up in 3 waves to about 1978 here, or maybe a little bit above, 62% retrace, and that will be our second wave, and that'll go up in 3 waves, and then we will have our big 3 down. So we've got some very exciting times coming up, and this is about as sure as I've ever been of anything. Let's jump in. I want to show you a close-up of this fourth wave. Here we are zoomed into the S&P 500. This is a 15-minute chart, and I'm just showing this fourth wave top here and the fifth wave down, which is a very obvious now ending diagonal. So what we have in an ending diagonal is 5 waves, but they overlap. And so you look for the touches to the trend lines to determine what the waves are. And this is a kind of a difficult one. It's not the usual configuration, because usually the third wave is very much longer. But what we have here is a first wave down, second wave up here to the top, and these are always in threes, and a third wave down here, and then we've got this fourth wave. Usually the third wave is the longest, but we didn't touch here, and that was the questionable thing, because we came down to just below a double bottom on this, just below the third wave. So there was a question of, oh gee, is that all, or what have we got here? Is this a corrective wave and we're going up to the top? But today, or Friday, we came up in this very strong wave, and this has come up in 3 waves, A, B, C here. So this is very obviously coming down, and we're going to have a fifth wave down here, and this will be in 3 waves. It'll probably be a big second here, and then come down a little tiny fourth here, and then off to a fifth wave. And again, it could go below 1745, not sure about that, but that's what I would expect over the next few days. Here's an hourly chart for the NASDAQ. And this is the same configuration as the S&P, except if you go back here to December, beginning of December, you'll see that the 5 waves up actually did a double top, and this should have been a better clue for us in terms of what was going to happen next, except that this wave, the first wave, came down as a corrective wave. It's overlapping, and it's not a motive wave, and so that really threw us off, or certainly threw me off. And then we had this ABC corrective wave and a wave 2, and then you've got a wave 3 down to the bottom here, and this actually measures out exactly to 2.618, the length of the first wave. So what I would assume is this fourth wave, which by the way looks like a typical motive wave down. It's finally something normal looking. The NASDAQ seems to be reacting in a normal way here, which sort of bolsters the idea that the S&P is doing what it's supposed to be doing, except that it's got these ending diagonals all the time. This is a fourth wave, first, second, long third, fourth, which does not overlap, and then we're in a second wave of the fifth here, and that, while it measures here from the top of the fourth to 1.618 times the length of the first, I think this one's going to come down here. It's going to extend to 2.6, and you will probably have a bottom of 38.58. Somewhere in that range. So that's what I would expect of the NASDAQ, and then that will be a first wave. Again, we will then turn around and do 3 waves up to 62%, and we'll get ready for the third wave down. It's really important, as I've been saying for a long time now, to keep your eye on the currencies, in particular the dollar and the euro, because the dollar is really the one that is taking this market where it needs to go. Everything moves based on the reserve currency, and everything is moving at once now because of the deleveraging of the debt that's going on. So what we're seeing here, and I've been saying this for a long time, is the euro going up, and the dollar, of course, US dollar, will be going down as the US equities do their thing. This is actually running contra to the US equities. So when the US equities go down, the euro goes up, and of course the dollar is going down as the US equities go down. I've been saying for quite some time that I expected the dollar to correct down rather than what everybody was saying, that it was going up. It will eventually go up, but right now we're going into a big correction. So let's look at the recent past here. We're in again to this big turn, everything again turning at the same time, beginning of December here, a couple of days later, but than the equities. But we came up in a first wave here, and because this is a corrective wave, it doesn't have to be motive, so we've had an ABC up. That was our first wave, and then we had this great big long second wave and a triangle here, and then we shot up in a third, fourth, and fifth wave now as the US equities came down on a first wave. So we're going to be able to judge the equities by what is happening in the euro, and so I keep a chart of the euro up so that I can see when the twists and turns are. So we've had this first wave up in a big 3, which is okay. Then we've had this ABC down for a second wave. This went right to 62% retrace, and then we had this triangle up, which started our first wave, and we went into, when we got through the triangle, into a third wave up. And by the way, these waves measure out exactly so that our third wave becomes 1.6 times the length of the first. And we've got a fifth wave here which is forming, and here we go again, an ending diagonal down at the bottom here, and we have another ending diagonal. Looks like it's setting up here, overlapping waves in 3, 1, 2, 3, 4. And if I measure this last wave up to be, this is the C wave, to be 1.618 times the length of our first wave here, so this 1.68, it takes me up to 1.15817. Now it might be a little bit shorter. This is a very long wave here, but that's what ending diagonals do. So we'll just have to see what happens on this. Somewhere between the top here and 1.158, we're going to see the top of the euro. Then the euro, as the US equities goes into a second wave, the euro is going to come down in a second wave, and so we're going to see those two in lockstep again. So everything is on the same path. You just have to think upside down in terms of the euro and the US equities. So things are getting interesting. Once we get up to the top here, this is going to be a great trade on the way down, as will be the second wave in the US equities. So lots coming up. There are some real opportunities, and you can also, I'll post a chart of the Canadian dollar against the US dollar as well, because that is a very obvious, although it's been a very up and down corrective wave, we know where that one is going as well. So a very obvious opportunity there. Good trading.